Friday, January 8th, 2021, Maneco 64, home of alternative economics and contrarian views. So today we're going to go over who's really responsible for inflation. Before I start though, I like to say Billy is fine. He's upstairs. I'm a little earlier today, so I just left him there. So I'm going to go through an article that I wrote for the Tyne Valley Express magazine up in the northeast of England. Unfortunately, the magazine is not going to be published this January, February. They will post the article though on their website. I've posted it on the maneco64.net blog. You can go there and read it too, but I'm going to go over it today in this video. Before that, let's look at where the markets are. It's 7:30 a.m. London. There are some interesting headlines from yesterday that I think is important to put through to you guys. One of them is a Fed official, Fed's Evans. He's, I think, a president of one of the Fed banks, or he could be in the board of governors. I don't know. It's not really that relevant. But he says that the Fed will probably keep rates at zero until 2024. And he doesn't mean long-term rates. He means the Fed funds target short-term rates. They want to keep it at zero for another 3 years. From what we heard in September from Powell, he was talking about 2023. Now it's 2024. The other interesting story is that Goldman Sachs is now calling for another 750 billion of stimulus. They're going to keep coming. They see it coming very soon. It says here it's on Zero Hedge. I'll put a link to it below in the description. Goldman expects Dems to pass new $750 billion stimulus next month already. So is this going to be a monthly thing? So, and the story says, or Goldman Sachs thinks it will help the economy. But when we go through my article, you'll see what I think about that. Anyway, let's look at where we are. Spot gold right now is 1909. It's down about 5. Yes, doesn't make sense. But this is short term. It will pick back up. They can't inflate the system. And gold and silver, it's very hard for them to stay down. I would say this is temporary. The other thing I wanted to say, as it pertains to Bitcoin, I've been thinking about things. For me, the journey in the sound money camp is like a marathon. It has been like a marathon because the dollar is the reserve currency. It's taken long. And the analogy for me is that Bitcoin is the guy running the marathon, and he's like really motoring ahead, really running too quickly. And I'm not going to try to keep up with Bitcoin. I'm going to finish the race. But I'm not too sure Bitcoin will finish the race the way Bitcoin is going. So that's all I have to say about that. Where we got silver? Well, silver is down 0.5%, just at 27, really, 26.99 to 27.02 here on the system. The stock market is continuing to motor ahead. You see, people think that funny money, confetti, is going to be good for the economy. But I think this is more a reflection of the fact that it is confetti. It's not real money. So the Dow could go anywhere. The Dow could collapse as well if interest rates keep going up. And we're going to come to interest rates in a second. So right now, Dow is 31,200, up 0.5%. S&P at 3820. NASDAQ is almost at 13,000, up 0.4% at 12,985. What about the currencies? Well, currencies are pretty stable this morning. The British pound is 135.84, up 0.14%. The euro is down slightly at 122.60. The dollar's unchanged versus the yen at 103.85. Versus the yuan, the dollar's down 0.25% at 645.60. Commodities, non-monetary commodities, that is, they're quite strong this morning. We've got crude up almost 1%, WTI at 51.20. We've got heating oil up 1%. We've got platinum continue to trade up here. It's up 0.2% at 11.24. We've got high grade copper making new highs. We're at 371.50, up 0.4%. So all the commodities or the major commodities are still continuing to go up. I told you I was going to look at the 10-year yield. Yes, we're now at 109. We've gotten up to 110. So that's moving quite quickly. I'm sure the Fed and the Treasury are keeping a close eye on that. They don't want that to race ahead too quickly. And if you're telling yourself that gold is going down because yields are going up, have a look at my video from yesterday where I talked about that. Now let's look who's really responsible for inflation. I'm going to put a link to the article on my blog below in the description. You can read it too. I'm going to go through it. I'm not going to go through the whole thing. If you want to read the whole thing, yeah, go in the description and click on it. But I'm going to go through the introduction and the conclusion. And I'm going to talk a little bit about it too. It says most people take inflation as being the increase in the price of goods and services and usually blame greedy businesses, labor unions, and speculators for inflation. It certainly seems to be a valid explanation of inflation. But in this article, we will look back at the classical definition of inflation that has not been taught in schools or universities for about 50 years. It is only when we understand what inflation is that we are better able to protect ourselves from it. And this is where I talk about my previous article, which explains what money really is. And it says, in my previous article entitled Understanding Money, I noted how the goldsmiths and bankers started using promissory notes for money, and that money was gold and silver coinage or specie. We also saw that the bankers, along with the UK government, stopped redeeming these notes for gold after the beginning of the First World War. By 1933, the US banks did the same, and in 1971, President Nixon also took the dollar off the Bretton Woods Agreement, in which the U.S. Treasury promised other governments to redeem 1 troy ounce of gold for $35 in currency. So that's what I talked about there. In Understanding Money, I talk about how before money, there was barter and you had to exchange value for value. You need to produce or provide a service in order to exchange value for value. What we're seeing now with all the stimulus is not value. We're seeing them create something that has no value and legislating that it has value, and people are buying into it. But eventually, this funny money or this fiat currency will lose all its value. And that's why you need to have precious metals. That's why people are probably also buying stocks. But I think stocks are heavily overvalued. Gold and silver and other commodities haven't been this relatively undervalued versus paper assets for more than 120 years. And that's why I think I will stick to precious metals and possibly also commodities. There are ways to be exposed to commodities. That's a subject for another video, of course. So the conclusion here of this article is that it is very hard to then protect one's savings versus inflation, and especially now with the rate of interest being kept at almost zero since the great financial crisis of 2008, investors and savers have had to put their hard-earned savings at risk in the stock market and riskier investments that provide a higher yield or interest. Think about junk bonds or high yield bonds. Think about even government bonds. I think they're risky now. Getting on the property ladder, that's real estate, has helped too, as bricks and mortars are limited in supply, unlike fiat currency. Having some gold sovereigns and silver Britannias, that's for the people in the UK. Just translate that into whatever country you're in. Have also helped savers, as the same concept of the law of supply and demand that applies to property applies to real money or gold and silver. So the next time you're told the packaged holidays led to a rise in inflation, just remember that it is government and our current monetary system that are responsible for it. So what's this about packaged holidays? Well, because you see headlines a lot here in the UK sometimes in the mainstream press when the CPI is published. And if it goes up, they'll say, a rise in prices of packaged holidays led to higher inflation, which is really not right, because that's just a consequence of inflation, right? Because inflation is the creation of money and credit out of thin air. Go through my article and you see what I mean. A lot of you already probably know that because I've been talking about that for years. So I'm going to stop at that and make it a short video this morning. I hope you enjoyed the video. If you did, make sure you hit the like button. Please share it far and wide. Think about subscribing to this channel if you haven't yet. And you can also follow me on Twitter, Parler, Facebook, and all these other platforms below here. I wish you all a great rest of the day. Take care. Bye.